Hi, Greg Dorsey here. It's Tuesday, October 20th. Welcome, Leeb Group viewers. We had a bout of profit taking today in stocks and commodities. Blue chips fared better than the small caps. The S&P was down about 0.6%. The Russell 2000 of small caps down 1.4% or so. Upside volume was outpaced by downside volume 3.5 to 1 or so. And likewise, the advanced decline line was 2 to 1 on the downside. Really, the only group that was in the green was information technology, and that was essentially flat for the day. What we had was economic data trumping the earnings reports coming in. Housing starts and building permits came in short of expectations. Also, deflation is still very much evident with the PPI, which overall was down 0.6%. Tomorrow we'll get a look at the Fed's beige book, but I doubt we'll see any real surprises there. Really, the most interesting data point today was out of Brazil. Their decision to reimpose a 2% tariff on foreign capital coming into stocks and fixed income investments. The idea behind the move is to stem the rise in the real, the Brazilian currency, which is up by more than a third this year against the dollar. The Brazilians really aren't alone feeling this. We're hearing discontented talk out of Europe, most notably Nicolas Sarkozy in France, calling for, saying that the euro at 1.5 to, or the $1.50 to the euro is unacceptable. Today in Canada, we had the Bank of Canada keeping interest rates there unchanged, although their economy is in much better shape, and they'd probably like to be raising rates here. They're worried that if they raise rates, it'll make their loonie more attractive and would make their exports less competitive. Structural imbalances being what they are, and our short-term interest rates at essentially zero, we really don't see any end to this downward spiral in the dollar. It's likely to persist for a long time to come, although we do admit that the selling in the greenback is probably overdone in the short run. But keep in mind, the size of the currency markets being what they are, dwarfing the equity and dwarfing the credit markets, there's really little any country can do for any length of time. Temporarily, they can stem the greenback slide, but not over the long haul. Going back to Brazil, the stock market dropped sharply on the news of the tariff imposition, but it did recover a good deal of that ground, closing down less than 3% on the day. And it really is a non-event on the long-term horizon. The country will continue to need foreign capital to help grow their economy. So don't let this move in Brazil scare you. It is a rapidly growing, resource-rich country that should remain an excellent choice for your investment dollars. Well, that's all for now. Thanks for stopping by, and we'll see you again soon.